And human nature is we want to catch the bottom or the top on every trade, but that's very rare you're going to do it. And when they do it, they scream from the rooftops. But for the other 80% of the time when they fail, you don't hear a whimper from anyone. So I'm not having a go at the price action traders. I'm sure there's some very good price action traders around the place. But I wish they would just accept that technical indicators do work too.
What's up everyone, welcome back to another video here on YouTube. Today I'm sitting down with Jim Brown. Now we used to meet in Da Nang, Jim and I, a few times. We went to the hotel, we went to have a beer or something, we talked trading, but now we're doing it on Zoom because of the pandemic, of course, and COVID and things. So how's it going, Jim?
Yeah, very good, Etienne. Thanks for having me, and congratulations on the big 50,000 subscribers to your YouTube channel, mate. Well done.
Awesome, thank you very much, thank you, of course. So let's begin and tell people a bit of what you do and who you are, if people didn't hear of you before.
Etienne said I live in Da Nang, Vietnam, have done for a few years. Australian, if you can tell by the accent. Been trading Forex on and off since 2002, full-time since about 7 years ago. And also the author of 3 trading books, and basically just trade my own money and support my readers just with Facebook group, Telegram channel, and just a Discord channel with one of my friends. So other than that, not much, mate. That's just about it. Very simple life.
Awesome. You used to tell me that since we last spoke, pretty much nothing changed. You're still trading the same thing, the same system, the same tools. I'm curious to hear though, has anything evolved in your trading or anything has been different, or everything it's been the same since we spoke a couple of years back?
Yeah, mate. No, the probably the main thing, I guess, is I've gone across to trading view. Well, I still I trade off MT4, MT5. I'm actually more leaning towards MT5 these days, just because of the different instruments you can trade there, and the platform seems a lot slicker, a lot quicker. But I've gone to TradingView, got a subscription to that. It's good for analysis, and it's good that it's on your phone and stuff like that. And because I use custom indicators, it's worked out pretty well, and it just presents a lot better. And you got that social media side of things with TradingView also, where you can publish your ideas, etc. I'm not a confident user of TradingView, so I tend to do a lot of my research still on MT5 or MT4 charts. I just find them, mate, I started when MT3 was still around, so I'm used to MT4 and MT5. But TradingView, I like it. So that's one thing. There's a few of my readers have actually pretty skillful when it comes to programming. So I've partnered up with a few of them over the last couple of years, built some EAs, and still in the process of doing it, something I enjoy. So I'm assuming most people know what an EA is. If you don't, it's a trading robot. Basically for MT4, MT5. I'm not even sure, can you do EAs a thing for TradingView yet? I don't know, are they?
No, you can do these systems that can backtest something, but you cannot trade with it. So you got to place your trades manually.
My TradingView guy, I'll give him a plug. Matt from Family Man Trading. I use his Discord channel to promote my stuff also, but he built a strategy tester, I think that's what you call it, in TradingView based on my method, which is pretty good actually.
Pretty good.
If you want to check that out,
yeah.
So it's a good piece of kit. So, but in the meantime, I'm trying to get into my the robots, the EAs, and look at getting on to MT5 because as you know, with MT5, there's a lot more default timeframes, and I'm a big believer in doing what other people aren't doing. So, like if you can trade on the 2-hour charts or the 3-hour charts or 6, 8 hours, 12-hour charts, a lot of people aren't doing that. Everyone more traditional 1-hour, 4-hour daily type stuff. So MT5 just gives you a lot more options, a lot more instruments, a lot more things to play with. But yeah, generally, most of it's just on the most of my trading is done on the daily time frame. That's just a lifestyle choice for me. I do get criticised because, like for us, now living in part of the world we live in, thank you for daylight saving, the new New York candle is now 1 hour later. So instead of getting up at 4 a.m. if you want to catch the open, I can get up at 5, which is not such a bad thing anyway. Generally, I just take market orders. I give the market probably about half an hour to settle on the new daily candle. Take market orders. I'm pretty sure about 80% of my trades go against me from the get-go. So, I get all this criticism. Why don't you use a limit order? Why don't you drop down to a lower time frame, look for a more optimal type entry? And I go, mate, just take the trade. It's a daily chart, 20, 30 pips, not that big a deal, really. And eventually, if it's going to go my way, it will eventually. If it doesn't, then I'm going to get stopped out anyway. So it's just all about lifestyle now, mate. With the EAs, I'm not a believer at all of set and forget type EAs. You've got to manage them. So for me, I use my system, the high probability or the divergence methods. Identify a signal on a daily chart, then I might take one of my EAs and just place it on a lower time frame, like an hour or a 15-minute chart or even 30-minute chart or whatever, and just work that daily signal and pretty well manage then just check the EA every 24 hours when I check the daily signal. So it's, just let it do its thing, as with the daily charts. So, it's all about making life a little bit easier, managing more of a portfolio manager than an actual trader. I get it that people want a trading robot that just put on and walk away for 3 months and come back. They're going to be squillionaires. It's not. There's far and few between EAs that do that. There are some, but you've got to manage them. They can be a beast. So and you'll play your account.
So when you say you manage the EA, is it that you basically look for a setup on the bigger time frame, you go down lower time frame with the EA to place trades, or do you also kind of turn off the EA sometimes when the market is not conducive for your type of trading?
Oh yeah, mate. EA will be taken off the chart in a heartbeat if things aren't lined up. And the good thing is too, you can, you might get a great signal. What I consider, like I sort of rate my signals on the daily time frame. Like say you're just trading traditionally where you risk say 2% on a trade. I might look at a trade and set up and go, that's a 2% one. That one's a 1% or 1.5%. That one's a 0.5% risk. So when it comes to putting the EA on the chart, you'll base your position sizing on that what you think of the daily signal. Then if the daily chart changes but it's still valid, you may on the EA adjust the position sizing on the EA or just something else. So it gives you a few options, and it just makes it easy. We're not here to make 100% a month, as we all know. We should know. Like a lot of traders, I remember even just like recently I was talking to someone in my group and he asked me how much is a reasonable amount to make on your trading per month. And I said, look, mate, if you make 10%, you're a superstar, consistently. If you make, 4 to 6% a month, you're doing pretty well. You're doing good. And he'd come back and he went, oh, that's not very good. I didn't expect that. I expected, like that every day sort of thing. And I'm going, well, you're in the wrong gig. You're in the wrong game, mate. There is people that can do that, but are they sustainable? Maybe the Instagram crowd. I don't know.
Yeah. This is a big thing with people who have not the right expectation in trading. They think they can do something, and then it causes them to associate with the wrong people, the wrong traders. It causes them to, first of all, risk their account way too much. And I think that's good to kind of bring back down to what's possible and realistic.
Yeah, and look, I understand that people with a small account, if you've got $1,000 and you're trading 0.01 lot on the daily time frame or 0.02, whatever, it's a slow grind. Like I get that they want it quicker, they want it faster. I understand that, but there is other ways of getting around that, and you will have to take bigger risks trading those small account if you want a bigger return or a quicker return. I understand that. I'm not suggesting that you don't do stuff like that, but you just got to be careful. Be prepared to lose that $1,000 or whatever, because if you put that $1,000 in your bank account, you'd be lucky to make $10 by the end of the year. So if you make, $20 trading on that 1,000, I know it sounds like not much at all, peanuts, but it's better than what your bank gave you. And as long as you keep your risk, your stress levels all under control, then you can always ramp up. You can always join a prop firm if your trading's good. You can always seek outside investors. As long as you keep your risk under control and you can prove you can trade, then people will come to you eventually if that's what you choose. But it's a slow grind. It's not, wham, bam, thank you, ma'am. You've got to do the work, And that's, look at the prop firms, which are the flavour of the year, aren't they? Prop firms. You've talked about them in your group, and they've been around for years, but just in different sort of business models. Like who's the darling prop firm at the moment? FTMO. What do you got? 30 days to make, which is 30 days, which is only 20 trading days to make 10%. I'm not sure what the exact figures are. And your drawdown's got to be fairly low. That's hard work for especially beginner traders. That's hard work, So, whereas other prop firms, I guess like CTI or 5%ers, or there's a couple others, Lux, I think, a few others, you've got 6 months, 12 months to get through all that stuff. So it's a lot more relaxed, especially for us swing traders. That's me. Because on a daily charts, mate, it's like this morning, because I call trades setups based on a watch list, only a small watch list of about 17 pairs in my trading group. And I think we've just about got trades on every pair, so there's no new trade setups. So it's boring, and people go, daily charts, like watching paint dry, It is, but you can do other stuff in the meantime. So even you're getting bored.
But I'm really glad you mentioned this, first of all, because a lot of people are really short-term focused in the sense that they only look at like the next few months. They want to make it next few months. They want to be able to make a living in the next 6 months or something. But the game in trading is a lot more long-term, where sometimes it takes 2 years, and then you get to places where profits fund you got investors, you got opportunities to do other things. And I think that's where the value is. Even if you have a small account to begin with, it doesn't matter. That's what you'll end up with in the next few years.
Yeah.
So you got to take that kind of way to grow progressively over time.
Yeah, and it's like everyone says, you're not going to start trading on Monday and be successful by Friday. It's not the way it works. There is work involved. I wish people would sort of understand that, and the good thing is, because I trade in the daily time frame, I don't really do anything else except sleep, eat, and probably drink too much. I got plenty of time to interact with my readers, and I enjoy it. And I see all them going through the different stages, and and I'm not going to name names because I don't want to embarrass any of them, but I'll see trade setups. They'll post a trade setup, then next week they'll post another trade set. It's a completely different system. Then the next week it'll be a completely different system again. Then they're on a different time frame. They're trying something else. I get it. You try stuff like that. You do it on a demo account. That's good. But you have to find something and stick with it, and get who cares if it's got a 40% win rate, as long as you're making more money based on your returns, then you're losing. But the problem is, with a 40% win rate, that means you're losing 60% of the time, which means that's going to mess with your mind and that, so that there is, and we all know about the psychology in trading. It is a big part of it. It's hard for a lot of people to wrap their head around that, pardon the pun, but it is a tough part of it. And you do a lot of stuff with Mandy and that, and all this stuff, it's a big part of trading. So, then people look for the 80% or the 90% win rates, which are crazy, especially when you're starting out. Accept the losses, trade small. I'm going on a rant here because that's what I do. And
it's a good point. Yeah, of course, it's a good point. So
it is, and a lot of people, they bounce around all over the place, and people ask me, well, what's your profit target? And I don't trade with a profit target. I know probably you do, or you've got certain levels you aim for and stuff like that. And as I always say, if it works for you, do it, but it's not my thing. People ask me what my risk reward is. And again, it's not something I really give a hoot about. It's as long as I'm profitable at the end of the day and my drawdown's under control, that's all I'm concerned about. Risk reward, profit targets, nah. Even using stops, there is some, and as I think last time I spoke to you, I'm pretty sure I said I don't like losing trades where I start hedging and I hedge in that. I'm nowhere near as aggressive on that as I used to be. So basically, I'm still hedging, and I still do a loss recovery type methods. But the hedging is more based on better setups nowadays. So if I see something, especially in the higher time frames, hidden divergence, which is a big pet favourite of mine, hidden divergence, not regular divergence. If hidden's there, I'm hedging every day of the week. I don't need stops. I'm generally confident 90-something% of the time I'll get out of that. At least worst case scenario, break even. Might take a loss every now and then, but I can work with that. That's, as I said, losses are a part of trading. So non-traditional, a lot of trades are going, no stops, no profit target, none of this risk reward stuff. Straight away, you get criticised for that. I get that. But I've spent hours and hours and hours on historical charts or on the simulator. You use the soft 4FX simulator, great piece of kit. I use it all the time, and I just spent hours on historical charts. Even before we got on this, as I was waiting, I was on the charts, mate. It's just kept, that's my thing. I just love it.
Interesting. A lot of people want to get into creating their own system, their own algo or their own strategy to trade, but they're kind of confused how to do it. Maybe they backtest something, it doesn't work. They do something else, doesn't work. So how would you suggest them to create their own system? Like, what steps do they have to take to do that?
Look, there's thousands and thousands of systems around. Just look at, the classic books, the market wizards. Obviously interviews with very successful traders. And I don't think any two of those traders trade the same method in those books. So, and no one's reinventing the wheel here. Just my system is a combination of indicators and ideas taken from other systems and put together. So, and like I say to my readers, and you probably say the same, I'll give you a framework. I'll give you some ideas, and this is just from me. I'll give you some ideas, a framework. Take it, what you think works for you, test it yourself, add your own ideas or add your profit targets, add your risk reward. I don't care. As long as something you're comfortable with and it works for you, then it's just a matter of tweaking it. And like, I'm always looking at new stuff, as you probably are, just mainly out of curiosity, see if it can make a difference to my methods. But generally, I keep on going back. My bread and butter is the method I've practiced, I know works, but I know when you're starting out, you're getting bombarded from every direction, and another new thing that's probably, it's not annoying, but the price action traders, the supply demand, the resistance support, what's the other, order block, order flow, and all this.
All the people who say that there's only one way to do it and that's the best way to do it, then it just doesn't work for me. It's impossible.
Mate, look, I've watched a lot of these, and a lot of them are young guys too, and I've got no problem with that. Price action traders or naked charts, I get it. I've watched them in action doing live trading challenges, and it's painful. I know there's a lot of pressure when you're doing a live trading challenge. I get that. And I've watched all the analysis and my head's spinning, like it's not for me. It doesn't work for me. So I can't. I need something on a chart that says like a red or green dot, which is, you'll see on my charts, that's what I've got. So if it complies with all the other rules, green dot, buy, red dot, sell. I know it sounds stupid and people go, but geez, Jim, your entry's a bit late on that trend. I'm going, all right, you show me where you nail the top or the bottom, and so you don't need to catch the whole trend. And human nature is we want to catch the bottom or the top on every trade. But it's very rare you're going to do it. And when they do it, they scream from the rooftops. But for the other 80% of the time when they fail, you don't hear a whimper from anyone. So I'm not having to go at the price action traders. I'm sure there's some very good price action traders around the place. But I wish they would just accept that technical indicators do work too, if used.
And that's a really good point too, because a lot of people are following these like price action courses or something, and then of course some of them are good and some of them are like really subjective, where it's like only principles that you can apply and then that's it. And people are taking the course, but they're less like confused about what to do after. Whereas they should understand that there are people like you and me who like systems more and who prefer to have clear rules that we can trade with. And so different personalities, different styles, of course, but yeah, people can go different ways.
Don't get me wrong, Eddie, and there is discretion involved, even if you're manual trading. I look at
Of course.
And it probably comes with experience, or what you would call a gut feel, because I've been looking at charts for it. When I first started out trading, that was in the futures trading in the mid-90s. I actually had to hand draw my charts, and I studied WD GAN, the basics of GAN, not the boogie-woogie GAN stuff, just the market structure and that. So, the ABC or the 1, 2, 3 type market moves, a bit of Fibonacci, that sort of stuff. So, I can look at a chart. I don't even have to put a fib tool on or a range, because all markets move up and down. They don't move, straight up or straight down. They zigzag, I guess you'd call it. So that's, you just have an idea. If you've got higher highs, the price is going up, or higher lows, price is going up. If the opposite's going down. So I'm not, going to load up the farm to go the opposite to an obvious market structure, which is probably price action in a way, without all the, I don't know what even an order block is, but it's a term I've been hearing a lot lately. I've got it stuck in my head, mate.
Yeah, a good point.
So all this jargon, all these new phrases or jargon, it's basically the same thing. You're just looking at market structure. Markets go up, markets go down. They turn. And one thing too, like I say, I don't use stops and I hedge and stuff like that. You got to remember most of my trading. All right. So if you look at the 28 main pairs, whatever they are, it's only made up of 8 currencies. So they're pretty big countries. We're talking about, your home country, my home country, the US, UK, Switzerland, Japan, blah, 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 New Zealand. So they're 8 countries that are not going to let their economy tank. They're not going to let their dollar, the yen or the pound or whatever, or the euro go to zero. They've got central banks. They've got governments that control all this stuff. And they're going against each other. So it's, Forex trading is made up of 2, as we know, two currencies. So it's a pair. So they go up and down. Now, unlike stocks, and I'm pretty sure gold, even you'd probably say cryptos to a certain extent, always probably got that positive or bullish bias. So, like, especially if you're a stock trader or trading in the indexes, they're generally going to go up. So, but with currencies, they can go both ways. They can go up and down just as easy, because you've got these 8 countries controlling their central banks or the governments controlling their currency. So I'm quite happy to trade without stops. Eventually, it'll come back to a price. You might get killed with overnight interest rate or swap rates or something like that, and your margin might be chewed up a bit. But it's if you can understand how they move, especially if you take if you look at a pair like, say, for example, New Zealand Swiss franc. That's a pair that doesn't go anywhere anytime quick unless there's some big news, like 2015 with the Swiss franc or whatever, something like that. But generally that pair will just go meander along like like Brown's cow sort of thing. Whereas if you pick another pair like the pound New Zealand or the pound yen, you might be on for a bit of a wild ride or something like that. But, every pair's got their own way of moving. So you can you get a feel for this sort of stuff. You know what I mean? I'm just ranting on here about stuff. But
yeah.
currencies move in up and down, and that's what I'm saying. You can go bearish, bullish. It doesn't really matter. Reversion to the mean type systems work well, and that's one of my favourite setups. Like I've got 3 moving averages on my screen, and they're just to give me an idea of trend. That's all that they are. But if price moves too far away from them, it's common sense that eventually price is going to come. Either price is going to go back to the moving average, or the moving average is going to go to price. It's same with my MACD. I use like a zero lag MACD. It's called the MACD Platinum. It's a little bit different to a traditional MACD, just a bit faster on the action. But if it goes a long way from the zero level, eventually that's going to go back to the zero level. So, because that's how currencies move, So there's my little rant on bearish and bullish bias.
So how do you deal with correlations? Because these 28 pairs are pretty much moving the same way.
All right. In my private trading, I'm trading I think I've got about 35 pairs on at the moment. Trade a few exotics, but that's a loss recovery system, but it's based on exactly my same method. But say in my group that I've got a watch list. There was the 28 pairs in there, but it's a lot of work for me in the morning, because if you get, say, one trade set up on one of the pound pairs, it's normally all 5 of them. So, and I do a screenshot for all the trade calls I do, which I share with my group and stuff. So it's a lot of work for me. So basically I just said 3 or 4 of each currency in my watch list. So, I've got 3, I think I've got 4 pairs with the Aussie in it, 4 pairs with a pound in it. So I've tried I'm not a big fan of the Canadian dollar, mate. So I think I've only got that maybe once or twice. And I'm not a big fan of the Swiss franc either when it comes to, because there is correlation. And it's a lot more obvious in the last few years. I've been doing a bit of research on this lately with regards to the actual average true ranges of the way markets are moving. They're really tight last couple of years. It's 2018, 2019, 20, 21, other than the COVID, March, February 20, where there was a bit of volatility, obviously a huge bit of volatility, but generally it's down to the same levels it was back in the early 2000s when I first started trading some of the pairs, So low inflation, low interest rates around the planet, the money's not getting swapped as much. Still a huge amount of money going into Forex, but technology changes. They've got different ways of trading. You've got more, I guess, high frequency type trading. There's less bank traders, as we know. There's more institutions and stuff like that. So it's and correlation is becoming a bit of an issue. And you got to remember too that I think about over 70% of the actual market involves the US dollar. So when you look at all the major pairs that are traded, I don't think it's till you get to the euro yen, all the ones above that all involve the US dollar. So the US dollar moves, basically the whole market's, or 3/4 of the market's moving. So it's something you have to be aware of. I'm even, when we're talking about it before, going to MT5. One thing, 8cap is a broker that you mentioned a lot, and that's the one I'm sort of looking at. They offer the instrument, the US dollar, and I track the US dollar every day on the daily charts, just to get an idea. I'm not sure how how it's all put together, the instrument itself, but it moves well on the technical charts, and if you can trade it, and as long as the spread's nice and the minimum position sizing and the overnight interest rate stuff, which that's what I'm checking at the moment with 8cap. I've just loaded up a heap of cryptos, heap of indexes or indices, which depends which way you say it, and just load them on a demo chart just to see, and just let them ferment for a month or so, just to get an idea of how they move and what their interest rate stuff is. But yeah, so yeah, you got to watch correlation. It is a big issue. So it's not terrible, but it's something you have to be aware of.
Tell me more about the exotics. 'Cause that's something I've been researching for fun, but I've never really traded them that much. So how do you look at exotics? Which pairs you trade and how do you trade them?
I've been trading the USD Singapore dollar, USD Hong Kong dollar, the South African rand. They're three that I do. A few of the Scandinavian ones, Norwegian, whatever it is, and the Swedish, whatever that is. But both against the US dollar. But again, you got that correlation with the USD. Mate, on a chart, they look exactly the same. Some of the charts are a little bit ugly when it comes to like ranges and that, but generally the bigger ones move pretty well. People get scared off by the big spreads, but what happens with them is if you say the euro spreads 2 pips, the euro might move 100 pips in a day. One of the Scandinavian ones, the spread might be 100 pips, but it'll move 1,000 pips. So it's all relevant, it's not. So people got this thing about pips and spreads, but it's all relevant to what you're trading and how it's traded and what the return is. So your risk is still the same. A 1% risk on a trade involving the South African rand is the same as a 1% risk on a euro, depending on what you're talking about dollar-wise, not. But, so it's not, there's nothing to be scared of, but the only thing I can point out, there was a couple that caught me with my pants down over the last few years, and that was the Mexican peso. No offense to any of my Mexican friends, and the Turkish lira. So trading both of them can be a wild ride at times, and you have to be careful of the overnight swap on one side. So you get good money on one. I can't remember which way it is, but for example, if it was buy on the USD Mexican peso, you earn good money on the buy side, but if you sell it, you might win 10 pips or whatever, profit 10 pips, but you lost the equivalent of 100 pips just on the swap sort of thing. So that's when you got the big discrepancy in interest rates, that's when you got to be careful. But generally, no, the Scandinavian ones, South African, Singapore, Hong Kong, chart's a chart, mate, as we know. Like sometimes you can put up a chart and I just saw recently someone put up a 1-minute chart and someone put up a daily chart side by side. Asked the crowd to pick which was which, and really, it's pretty hard to tell.
I think it's a lot of the mindset or how you perceive things. So your mindset affects what you think about the chart. So if you think of a 1-minute chart, you'll be more afraid, more stressed out compared to the daily chart, and because you see that, then you're more afraid of it. Look,
I'm not a day trader. I can day trade, but it gives me a headache after about 3 days. I've got the focus of a goldfish. After a few hours, my brain's frazzled. I can do it though. The decision-making process is a lot quicker. You have to be more news aware. Now, if someone's distracting you or something, then you're losing your focus. So it does take and I know day trading is sexy and everyone wants to do it, and you're flat by the end of the day. I get all that, and it's a great thing if you can do it. It's probably a younger man's type job. It's not for me. As you can see, I wear glasses. I get a headache after about 3 hours of staring at a screen. But it's doable. But then you've got other things like you want to be on the right platform. Like with regards to your spread. You want low spreads. You can go on a lot bigger, so you probably want more leverage. And you want good internet, etc. You want to be set up well and really professional when it comes to day trading. And I get it. It's a sexy thing, and people like to justify earnings for how many hours they work. It's what's built into us. We work a normal 8 to 4 job. So when you come to trading, you think you should be working for 8 hours to justify their earnings. Whereas some people, I say, look, I've just got to go to work because I've got to check the 12-hour charts when I'm maybe at a bar talking to friends. I go, oh, all right, how long gone for? I go, could be gone for 1 minute, could be gone for 5 minutes. And I'd come back and go, that's my work done. They went, you were gone for like 30 seconds. I went, yep, that's me done. Because, there's check the charts. There's nothing, no new trade setups, walk away. Or, put one trade on, done. That's it. So, the day trading, I get the day trading. I get how people want to do it. Oh, there's a message from my programmer. I get what they want to do with stuff, but I just like the low stress, not rushed in decision making, daily charts. I am trading 6 hour and 12 hour charts at the moment, but it's only on a few pairs and I'm slowly winding out of them. And, because I've got time and it doesn't worry me. So, my sleep pattern's good. And Asia's not a bad place to trade.
It's actually pretty good because you have Europe and the US session. It's pretty good.
It's not too bad at all if you're a day trader. It's actually an excellent place to day trade from here. But day trading, you've got to be on your game. You have to be, and like we've all done it, mate. We've all been there. Like you start off on, the daily charts. This is boring. Drop down to 4 hours. Yeah, boring. 1 hour, and then you're suddenly in front of a computer for, And it depends on if you've got a normal job, you might only be able to trade 3 hours in the evening. So you might have to be a day trader if the daily charts don't suit you. You're not going to be able to trade any other time frame, So.
Interesting stuff. And I think the audience will have a lot of takeaways and things that they can apply. So we talked about the idea of looking at day trading and things, or not day trading. We talked about the different time frame, doing things that are different from other people. We talked about the exotic pairs. That's a lot of stuff. So what can they find you? They'll connect with you or reach out after the interview.
My company or my books is all goes under the JAGFX. So JAGFX. So if you just Google Jim Brown Forex, you'll find me everywhere and anywhere. Like I said, I have the Facebook group, which anyone's more than welcome to join. It's just not about my trading styles. I'd love to see how other people trade. I've got the 2 Telegram channels, which is a bit of banter on there, which is I'm not really sure what Telegram was, but I'm slowly working it out. And Matt from Family Man Trading, he lets me use his Discord channel, so I've got stuff on there too. I post stuff on Twitter. Apparently, I've got an Instagram account too, but I don't know how to access it, mate. No idea. But no. So, but even emails and stuff. They've got all my email contact details on that website, jagfx.com. It's not hard. It's easy to find me.
I know a lot of people watching read your books. I know they bought it maybe from the last interviews, and that's good. If people didn't buy your books yet, they should definitely buy it. Definitely a good book, and they get your indicators for free anyways. That's good. That's awesome. So we'll put a link below the description for the video, and people can just watch this and definitely get your book after. Totally recommend it.
Thanks, Mike. You're a good man there.
Awesome. I appreciate it. Thank you, Jim. I think it's been good. A lot of advice, and we'll catch you guys pretty soon.